Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in TradFi, digital assets, technology, and financial planning. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Craig Shesky, Chief Financial Officer of Nasdaq listed the metals company, Scott Vincent, President of Critical Ocean Minerals Research Center, and Samir Kapadia, Managing Principal at the Vogel Group. They join us to discuss the rising demand for metals, which are necessary for electronification, renewable energy, AI, and military applications. It is great to have all of you with us. Kind of, a big statement there, the transition from energy independence to metal independence. But let's provide some context first. Craig, we'll start with you. Where does the metals company sit within the energy ecosystem?
Sure, it's a great question. And you mentioned metal independence. We're in a situation where really you could tell 20th century geopolitics just through the lens of oil and gas. It's going to be a similar type of dynamic in the 21st century with metals. What TMC is working on, we're a developer of the world's largest estimated undeveloped source of battery metals through a resource known as polymetallic nodules. In fact, we have one here on the table. And we have 1.6 billion tons of these nodules. So putting that into context, this nodule is full of nickel, copper, cobalt, and manganese. And we have a sufficient amount of those nodules to electrify every single vehicle in America, 280 million EVs. So the United States is in a situation where nearly all nickel, manganese, and cobalt currently has to be imported. And the country that dominates the processing and refining of those metals, to nobody's surprise, is China. So how is the US going to ensure that the metals needed for the clean transition, and not just the clean transition, but further industrialization, population growth, national defense, to make sure that those metals are available? We feel that we can be a major part of that solution by providing a large, scalable, and relatively low impact source of metals. And it's important for the US not to trade hard-won energy independence for metal dependence.
Right, and we will certainly dig into those topics. There's a lot to be said there. Scott, tell us about the Critical Ocean Minerals Research Center. What kind of work are you doing there?
Sure. Well, we also focus on deep sea nodules. We look at all the minerals in the seafloor, but we think deep sea nodules are the first that we'll exploit because really it's such a win-win scenario for the world, right? We can go after these minerals and do less damage to the environment than we're doing today. We do less damage to humanity, and we can extract them at low costs and try to catalyze the decarbonization push.
Mm-hmm. And what about the Vogel Group?
Yeah, so Samir Kapadia with Vogel Group. We're a bipartisan government affairs and consulting firm in Washington, specializing in clean energy projects and manufacturing. Done about $8 billion in CapEx projects over the past 6 years, and more importantly, getting these companies the right kind of grants and tax credits so they can be successful. That's what we do.
All right, Craig, let's talk more about the technology here. You said that there is enough available to power every car in America.
That's right. And look, that's what's sitting on the seafloor. We're not going to pick up every nodule. Right. And not all of them are going to end up in an EV battery, but it gives you a sense of scale. This is ranked by mining.com, just TMC's area alone, as the #1 and #2 largest undeveloped nickel project that happens to have a huge scalable amount of cobalt and copper and manganese as well. So what's really special about the resource is that you have 4 metals in one resource. And in order to actually collect them, the technology here is something that's been known for a long time. In fact, it was many US companies who were pioneers in the space collecting thousands of tons of these nodules off of the seafloor in the 1970s. So they're an area of the planet known as the abyssal zone of the Clarion-Clipperton zone between Mexico and Hawaii. But there's no commercialization of this industry back in the 1970s because the regulations did not yet exist on governing the high seas. So it's really that push for these regulations to be put into place. I think that it's woken up not only investors to this opportunity, but those in the US government, whether it's on Congress, whether it's in the White House, now realizing that this industry is about to start. And frankly, the United States has been behind the 8 ball.
Right. Scott, can we source these non-China linked?
We can. We can source them in the international waters. We can source them in some countries' exclusive economic zones. And the resource is very, very large, and we can source these metals economically. I will say one thing that has kind of stymied capital formation in the industry at this point is there's been a lot of misinformation that's been put out on the internet through the media by certain environmental groups who are trying to raise money for their organizations. But unfortunately, that misinformation is really hurting our economy, it's hurting our national security, it's hurting our competitiveness, and more than that, it's hurting the environment and it's hurting human lives. So that's what we're trying to bring the science behind that statement to people so they understand that this is a win-win resource for humanity.
So it's a sustainable alternative.
It is.
Right. Let's talk about how this is currently being regulated, where we're falling behind. Does this have bipartisan support? Why is there bipartisan support?
Yeah, it's interesting, Jill. The critical minerals was often a very sleepy subject in Washington for many years. After all, nothing on the periodic table is quite interesting at times. But just within the past, I would say 5 years, and particularly within the past 18 months, there's been robust support from Democrats and Republicans to address our critical mineral security. And we're realizing that land-based mining, which has been dominated by foreign adversaries like China, they've completely controlled and outstripped all of those resources. And now, if you look at the statistics, they've invested $1.1 billion in deep sea mining activities and technology. They have 5 out of the 31 contracts to access these resources. They have 40 entities within China that are coordinating on these efforts. And they've done 50 voyages, 29 of them focused on collecting what you're seeing on your table here. That's concerning. And so the U.S. Department of Defense has taken a very robust look at how they're going to address this challenge, and Congress is doing the same. And frankly, I think it's going to be a hockey stick growth in terms of Washington getting involved here. It's a little too late.
Sure, but just to build upon that, one of the reasons that the U.S. has not had a seat at the table is this is governed by an international organization. So the International Seabed Authority has been tasked with coming up with the regulations to first allow the exploration of resources like this in international waters, and then eventually commercial production. In the 1980s, when the UN Convention of the Law of the Sea was presented and then ratified, the U.S. never ratified it. And the U.S. is an observer of the regulator for this industry, known as the International Seabed Authority. The U.S. attends the meetings, the U.S. abides by the rules set by the International Seabed Authority, but the U.S. is not a full member of the International Seabed Authority, and that prevents the United States from getting access directly to resources like this in international waters. So there are opportunities for allied companies, countries to take resources like this and then bring it to the United States for processing and potentially refining. Ultimately, that's what a company like TMC would want to do. But it really has to be that end around for the United States to get access to these critical minerals from seafloor resources, because they don't yet have a seat at the table.
Right.
Going back to your point about bipartisan sponsorship of this, because it is such a win-win resource, I think that is why we're starting to see the tide turn in Congress and in the administration. People are starting to wake up to the science, and they're realizing that this is something that we should be doing for the environment, for humanity. And every side, whether you're a Republican or a Democrat, we all win, and we also have a solution for China.
Right. I would also argue that because it's a national security issue, and to your point earlier off camera, the U.S. is always looking for some way to be competitive, right? So the competitiveness and a national security issue, I'm sure that was a catalyst to start taking this on 18 months ago.
It certainly has, and I think we first saw this kind of fully in doctrine of the fiscal year 2024 National Defense Authorization Act, where Congress asked the Department of Defense to say, hey, you need to write a report and tell us exactly how you're managing this, because we're looking at these numbers from China and they ain't pretty. And I think even within this budget cycle, after all, we know the challenges the United States is facing in a variety of theaters, some conflicts that we're still trying to grasp. All the meanwhile, we have this industrial renaissance in the United States, and there are no inputs to fuel that renaissance. So there's this confluence of events where we have a foreign aggressor, we have some challenges, and now we have a Department of Defense with co-led legislation from a number of senators and congressmen are saying, let's go put some effort into this and do it quickly. And I think that's all coming to head right now.
And it's important, too, what the U.S. is being asked to do with respect to critical minerals and seafloor resources. The rules are being put into place as we speak, and this is really the tail end of 30 years of a regulatory process. The U.S. is not being asked to weigh in on the environmental benefits or potential impacts of this resource. We certainly believe that the data is there showing that this resource can be collected at a far lower carbon footprint than traditional land-based sources, no tailings, no waste, no deforestation. But doesn't it make sense for the United States to at least lay the groundwork to allow for the future processing and refining? Nobody's asking the U.S. to say, give us a thumbs up or thumbs down on this resource, but rather, assuming the international community agrees on the rules to allow this to go forward, why would the U.S. not want to be ready? Why would the U.S. not take the steps to fund feasibility work on eventually, having a if you build it, they will come type of mentality? At least take the steps to know that this resource is coming, so that 5-10 years from now, they don't wake up and realize this is another industry that was ceded to China.
And Craig, you're right, because just even in the past 12 months, the Department of Defense has funded feasibility studies for cobalt, for nickel, for graphite, for titanium. I mean, this is not foreign to the Department of Defense. They're in this business. Last year, they invested $1 billion in critical minerals and materials programs. So this is just a part of that narrative.
Yeah, well, I mean, but see, that's part of the challenge. It's not even just with renewable forms of energy. We see it in AI as an example where we're falling behind in terms of putting out a global regulatory framework and being there at the foundation. The EU has it done, other parts of the world have it done, digital assets, same thing. And we're seeing it with renewable energy and in a way, it's almost a good thing it's a security issue, or else we wouldn't even be thinking about it. And I think that's part of the challenge is the technology is there, however, the infrastructure and the regulatory framework isn't there, and then you can't regulate by enforcement should something come up. I mean, we have to be there at the beginning of the framework.
Yeah, and if you look at the Inflation Reduction Act and the bipartisan infrastructure law, very lofty kind of ideas of what the United States should be. I mean, we got back into the industrial planning business, something that we haven't done since the Gilded Age. But if you look around the United States, you have a large announcements and large sites, but no workforce. Huge factories, no electricity. And now, within the critical minerals framework, you're trying to make all these awesome things, whether they're renewable energy projects or they're defense platforms, and there's no minerals to support them from allied countries. So what do you do?
Right, well, the answer is, Craig, it's certainly a private-public partnership. You need the capital and you need the skilled workforce.
And I think one of the things that's very encouraging on that point, if the political will is there, that the U.S. certainly has the research capability and frankly the technological capability. Again, it was many U.S. companies that pioneered this space back in the 60s and 70s. It was a lot of U.S. researchers that initially did the work on nodules in the Clarion-Clipperton Zone and elsewhere. In fact, the National Oceanic and Atmospheric Association, NOAA, presented a report to the Senate in 1995 saying, we've answered nearly all of the questions in terms of the environmental impacts on deep sea mining, and it's important for the U.S. to move ahead. Those calls weren't necessarily heeded, and now this is kind of being brought to the forefront again. But I'm encouraged by the fact that we, a Canadian company but listed in the U.S. on the Nasdaq, we have the ability, as well as other contractors, to help the U.S. catch up. It's not too late, and frankly, there is the research, the scientific capability to do it. There is the technological capability to do it. This is one of the few areas where Western companies and countries actually have a lead on China when it comes to the technology being developed to start this new industry. And really all the United States has to do is raise their hand and say, okay, here's a little bit of funding, a little bit of political capital, and frankly, we can provide a buffer against what would otherwise be another major industry dominated by China.
I mean, Scott, you said there's data gathered over 45 plus years.
Yeah, almost 5 decades of data. We've got all kinds of support for this. And to Craig's point, you know, just a signal from the U.S. government would help unclog the capital markets. It would really be a sign to people out there that a lot of the noise and the misinformation that you're hearing from other parts, it's misdirection, right? And the U.S. government has done its homework, and they understand that this resource is a win-win for society, and it's really one of the few pathways we have to create the minerals we need to compete in this world with China.
Yeah, I mean, it also sounds like, you know, the type of skill that's needed here is also great for jobs as well. I mean, these are high-paying, high-salary jobs.
No, it's very true.
The job creation piece of this, I think, is what's really exciting, because if you're able to collect these nodules through allied partners with allied countries, what have you, without the United States having to ratify the law of the seas, which is all very tenable even within the current construct, what you can see in terms of the United States, in terms of building that refining capacity, can be something that could serve all kinds of renewable sectors, and not just the defense platforms and other things that we care about from a national security perspective. So what I think the Biden administration and even Republicans, that are more wary of these programs, are saying is, let's have a mosaic approach to how we tackle this industrial kind of revolution. We can't have single point of failure projects where you're dumping $500 million into one site, praying that it's going to work out. You have to have strategies and diversifying that. This is a part of that ecosystem, and people are getting it now.
No, that's a very good point too, in that it's a mosaic approach. It's not either or, but it's and. You're talking about, let's say, the International Energy Agency saying you need 4 or 5 times more of some of these base metals like nickel and cobalt if you're going to electrify, if you're going to raise the standard of living for billions of people on the planet, population of which is going to continue to grow. Where is that going to come from? Might it be recycling? Yes. Might it be additional mining on land? Yes. And then might it also need seafloor resources? Absolutely. So it's an all of the above approach, and to potentially try to take any of it off the table is frankly a fool's errand. But thankfully, I think we've been seeing, certainly over the last couple of months, a lot of additional political will in DC to ensure that nodules, as well as many other options, remain on the table.
And that's refreshing to hear. It's not like, electricity, as an example, is the one-size-fits-all solution. It has to be a portfolio approach, right? I mean, if you're managing a financial portfolio, you have to manage your risk and be diversified.
Yeah, and look, if you're going to really make this transition, you need low prices for consumers, right? And if you're going to get low prices for consumers, you need abundant minerals. At the end of the day, you're not going to be able to make that transition unless you have abundant minerals and low mineral prices. We've seen that happen in real time already.
Yeah, with the EVs,
right?
The average family, if you have a mandate, let's say, for example, you have to have one by 2030, 2035. Nobody wants to be told they have to have anything. But if you don't have vehicles that are large enough to support a family of 3, 4 kids, right? And then, and then it has, that's $100,000 at least.
So
Absolutely.
the idea at this juncture in time, right, when we're trying to make this transition, the idea that we would take a source of minerals like this that's so large and so, it's so beneficial off the table is just something that just doesn't seem tenable.
How long will this take from start to finish to become a scalable source of energy?
Yeah, look, we think it's already there. TMC alone expects to be in commercial production by the end of the first quarter 2026. There are other resources such as the Cook Islands that might be developed as well. It'll take, I think, into the 2030s where many beyond TMC would begin developing this resource. But that's still a timescale which is pretty attractive relative to how long it takes to go from discovery to production for a land-based mine. Your typical nickel or copper project is 15 to 20 years from discovery to production. So we need all of these solutions quite urgently, and we think really by the 2030s this will be a major part of these metal markets. And for TMC specifically, in the term of metals and mining, less than 2 years away is right around the corner.
Mm-hmm. Is that realistic for mass production?
I think from a government standpoint, even within the context of, right now we're going through a Pentagon budget negotiation on the Hill today and over the weeks ahead. In fact, I believe the markup for when they're going to go through the bill is on May 22nd. So we're going to figure out pretty quickly whether the House Armed Services Committee or the Senate Armed Services Committee have taken this up in terms of realizing whether they want to fund, say, a pilot program to go and refine these nodules here on shore. If that does happen, and there's a lot of signals just from the recent bills and activity that it's going that direction, that would become a law by the end of this year, and then the government will really start putting checks towards getting these things refined here at home starting next year.
Well, just to interject there too, building, let's say, a new processing facility or refinery, that takes years, and that's something that is tough to get around. But still, it's easier than finding, a new deposit of sufficiently high grade to go forward over the course of a decade plus. I think realistically for this industry, you can expect to see processing initially through allied parties, let's say Japan, where we have a binding agreement to initially do the processing. So the existing infrastructure is in Asia. There's no getting around that. But then to take the steps to make sure the U.S. is prepared to refine this material, even if it's an intermediate material, to then take it to nickel sulfate, cobalt sulfate, the elements that end up in batteries, those are steps that the U.S. has to take now if they want to see that production anytime this decade.
Another thing along those lines, strategically for the United States, another processing route would have these nodules go into lithium-ion battery recyclers. And we've built out a lot of infrastructure there, and more is coming. They don't have a lot of feedstock, so keeping those guys fed, keeping that industry healthy until these batteries come off the market, nodules could play a role there as well.
All right, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.